Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny and slightly windy Thursday. I hope you all had a great week so far. As always, before we jump into things, we just have to get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, is linked in the description down below. And if you're curious, you can check out the Elliott Wave principle, which you can read online for free when you use the link that's in the description down below. And with that, we can jump right into it and take a look. We have a break-even start. We're up exactly $1 for the day so far. So our GameStop covered call options are decently in profit with a high chance of expiring worthless next Friday and a small chance. What's the current? We still have to wait for the market to open another 4 minutes before we see the current rate. But a very small chance to for us to close them out for $1. So basically buy them back already now. But we could close them out and realize the profit here. But the question would be, what would we sell instead? Now we could roll up the $35 call options. So I said, close them out and instead sell the $30 call options. But I'm not sure if that will make sense or not. We're going to take a look at it later. If we're looking at the charts, yesterday we saw the spike in Friday futures. Now we're zoomed in a little bit here. And I pointed out that very likely we have, during yesterday's live stream, we had wave 1, wave 2, wave 3 bouncing at the 661.8 extension level. And then we had the retracement down, likely an ABC for wave 4 that bounces at the 50% retracement level. And what we didn't do yesterday anymore because it was already past the stream was draw up the target areas for our wave 5, which are basically these, and we can see that we finished our 5th wave here as well. So we can, even with the naked eye on the hourly chart, see a 1, 2, 3, 4, or 4 technically here, 5 pattern. There might be another push. We see also this is one of the rare occasions where the 5th wave exceeds the target's not in place yet. Yeah, we need to drag that down. My mistake. So yeah. So let's start over here. So we have our wave 1, 2, 3 that was playing out yesterday, and we saw during yesterday's live stream the bounce from the 6618 extension level of this first wave. Again, the 38.2 and 61.8 levels, all of them are the, in quotes, usual turnaround points for a third wave. Not always, but often enough. And in many cases, the 261.8 level is actually the one where a third wave terminates, in my experience. And again, there are no guarantees, but it's just often enough that it happens that we can use it as kind of like a target area. We don't need that anymore since we finished that potential third wave and now 4th wave. Yesterday during the live stream, we saw the movement a little bit down here. And I pointed out that we hadn't retraced yet far enough and expected we at least will go down to the $5 mark, the 38.2 retracement, because that's a common retracement for wave 4 and 2. So 38.2 and 61.8 are the 2 common retracements. And in between, we have the 50% retracement. Hi, Olga. Great to have you here. Hope you had a great week so far. And in between, we have the 50% retracement where we turned around yesterday. Now with that, we can then use an expansion to mark our third wave. So which is this movement here pretty much. 1, 2, and then wave 3 is in that candle. And this gives us then our target area for a 5th wave. And we see that that target area is actually between 680 and 870. 61.8 would be the minimum target. And while we potentially already finished a 1, 2, 3, 4, 5 movement here, we can also get rid of this for now. We have not reached that minimum target yet, which brings us to the potential that this might only be one wave of the 1, 2, 3, 4, 5 that takes us up here. Or at market open, we just get an extended 5th wave here by getting a longer push here. Because at the end of the day, if this here is 1, 2, 3, 4, 5, then we also need 5 waves in here, which would indicate 1, 2, 3, somewhere 4 and 5. So there should be more upside here right now if you were long in Faraday future based on this potential pattern, which could be wrong. It's just my assumption. As we always know, your stop loss should be at 461, because if we go below that, then clearly we haven't finished the correction yet. However, again, I actually expect that we'll just get another push up to at least reach the minimum target here. And then once we finish this 5-wave move, that makes then an entire impulsive pattern. So if we, for example, go till here, we would then expect the next A, B, C or other corrective pattern to make this a wave 1 and a wave 2. Now, if we zoom out, 8-hour chart should probably be enough. Yep. The whole thing currently looks like this. And the big question is, do we have either wave 1, wave 2, and are currently in wave 3? Or will this be a big A, B, C? Or is this 1, 2, 3, 4? Although then it would need to be a diagonal, so the less likely scenario with wave 5 coming. Either way, one of the things, or not either way, let's get rid of a few things right now and focus on the bigger picture. So if this were wave 1 and so this here is wave 1 and this here is wave 2, if that were the case, then our target for a third wave would be based on this expansion level, and we can see that we have quite an upside in that case. Now, if we are still in a downwards pattern, but this is, for example, wave A, so 5 waves, 1, 2, 3, 4, 5, wave B, A, B, C in some form, for example, and this is right now wave C in development, then we could use an expansion starting point at the starting point of our potential wave A, endpoint of wave A, endpoint of our potential wave B. We get the target areas for a perfect, in quotes, ABC pattern. Now there's a third target area up here, which is the unlikely one. And we see if that were to be an ABC pattern, where we then proceed further downwards, we still would expect, first of all, to go at least above 1140. Second of all, to, in many cases, reach the 100% expansion level, which would make wave A and wave C equal, which happens often enough in zigzag corrective patterns. And third of all, with the option to go higher. So, but either way, there would still be upside to the minimum target. Yeah. So if this is a set wave 1, 2, and we're in the third wave, then we would expect one where we just saw on the hourly chart that there's still a little bit room up, 2, 3, 4, 5 to make a new high. And we would expect that third wave is set to at least reach the 138.2 extension level. Whereas if we go further down, we would expect still to reach at least the 835, 36 mark here for the minimum target for wave C, although that wave C should make a new high in this case. So again, we would still expect at least 100% upside. However, we'll have to wait and see how it plays out. One crucial point would likely be breaking the high that we had here at 70.99. So we're gonna put a horizontal line there. Not gonna set up an alert, but yeah, just to point it out. And so that's about Faraday futures. My exposure there is, we have a few shares after the reverse split. 200 shares that I had turned into 5 shares that we have left. We did not sell any covered calls against it. If we were to do that, now that the volatility is higher, let's see if there would be, let's say for January, would we get, that actually might make sense, although our average is considered right now at 15 after the split. And we don't have 100 shares, yeah, so never mind, we cannot sell because I would need to obviously dump. That might actually be worth it or not if I buy. They're missing 95 shares. It would cost us $500. And on the other hand, I could then sell. Nah. So I could theoretically buy, for example, the remaining 95 shares to top it up to 100. So we can sell a covered call, and I could then sell a covered call, for example, here, this one with on average around $200 premium, which means I actually would technically only pay the $300 difference for the 95 shares. But I don't think I don't think I should have considered that yesterday, to be honest. Yeah. So yesterday, especially during the downward movement, the buying of the shares would have been a little cheaper. It doesn't make a huge difference right now, but makes a difference. The other option, from the way it develops right now, it's possible that we really finish this wave up here and that we indeed have an entire fifth wave finished. So basically 1, 2, 3, 4, 5. Although it didn't reach the minimum targets, I'm not saying that's the likely case, but in this case, we would expect a retracement down again into the $5 area before we proceed further up. I honestly don't see any other pattern here. To me, this looks like a 5-wave impulse pattern with potentially the 5th wave not finished. But considering the current movement that we already went below this low here, the 5th wave would need to be finished here. It also is, what do we have here? 647, and here we have 648. So it doesn't make a new high, but it still fulfills the requirements. So while it doesn't reach the expansion targets, wave 5 only has to recover at least 61.8% of what was lost during wave 4. And so in this case, this would check out as a 1, 2, 3, 4, 5 pattern, which would then be followed, as said, by a corrective pattern, which would again retrace anywhere in that area. Most likely, it could retrace further, it could retrace a little less. But those are the most common turnaround points. And then from there, it would then, hopefully, if I'm right, develop the next impulsive pattern upward. So let's zoom out again, 8 hours here, and move on. Now let's take a look at GameStop. GameStop lost a little bit during the last couple, or not last couple of days, yesterday, or the last 2 days actually. We can, with the naked eye, assume that this is 1, 2, 3, 4, 5, A, B, C, which would indicate we turn around here potentially at the 50% retracement, which again is very common, or a very common level next to the 38.2 and 61.8 retracement levels for corrective waves. In turn, we still have multiple possibilities here. So either from the low that we had here around the $17 mark, this is wave A, wave B, and we finished wave C here with 5 waves up, reaching the minimum target for a potential wave C, which would then mean we're actually right now developing 5 waves down, so to a new low. Or the other option, this is wave 1, wave 2, and we're now in a 3rd wave. And in that 3rd wave, we just finished the 1st and the 2nd wave, because again, all waves are intertwined. So a 5-wave impulse wave is basically a wave 1, a wave 3, or a wave 5 of a pattern that's of a bigger degree. So basically, each wave subdivides in other wave patterns based on certain rules and guidelines. So it's going to be interesting to watch. Personally, if we zoom out, I think daily chart should be sufficient. I know it looks a little bit messy, but personally, I'm having a hard time labeling this corrective pattern here that either starts here officially, or we have a truncated 5th wave and it starts here. But if we assume something like a big ABC pattern, we should still get another push down. And as I mentioned yesterday, only if or when we cross the 29.99 here, does that idea become invalid, in my opinion. So we can still, or there's still the possibility that this is A, B, C, and we're now going to get another 1, 2, 3, 4, 5 down into the $15 area before we go further up. However, also, as I mentioned yesterday, doesn't really or shouldn't really matter long term, because if the overall pattern is correct, it doesn't matter if that's our low or if our low will become here, because then after that we should get another movement of 5 waves upwards. So we'll just have to wait and see how that plays out. Now, yeah, hourly chart is a little bit too much, 4 hours. Yeah, so let's try 8 hours. Yeah, so again, from the looks of it, we should get an upwards movement here, or could get an upwards movement, either because this is the first 1, 2, 3, 4, 5 in some form, although it looks more like an ABC. So from the closer lookup, it's more likely, or it looks more likely, that we actually are going to get more upwards development here, in which case rolling down my $35 call options makes less sense, because it would make it more likely that the shares get called away by next Friday. Because if this is indeed wave 1 and 2, and this is the 3rd wave, and we currently finished wave 1 and 2, we would be in a 3rd wave of a bigger 3rd wave, which means we should then expect during the next couple of days some stronger upwards movement. And and a breakout from this base channel. Yeah, so still happy with my GameStop position. Let's take it from the top. Barnes & Noble Educational could have finished an ABC pattern of some kind here, although we did not retrace all of it. So we have here the assumption that this is 1, 2, with the potential that this is our next one. No, wait, that this is 1, 2, 3, 4, and 5, which means we would expect a retracement down here. Now, it's possible that our wave 5 didn't finish yet. We see we are close to the 100% target area based on our assumption that this is wave 3. So based on our assumption that, I need this one actually, that this is wave 3, 4, and 5 in development. And if that is the case, then there's still a little bit room up, and this would be just some other kind of 1, 2, 3, 4, 5. I think the moment we go below 1166, that idea flies out of the window, and we're more likely looking at something like 1, 2, 3, 4, 5, A, B, C, and then another 5-wave push down into the area here, and are actually retracing this entire movement for a big for a fourth wave of a bigger degree. So right now, if you're not invested, yeah, it's still not a bad time to get in my opinion, because again, from here, even if we first correct down, the worst correction would be a 30% drop, in my opinion, to the 61.8 retracement before we develop the next 5 waves up. And if that only was a smaller correction, we first anyway get a push up before we see the next correction. Yeah. Okay, now Chewy we haven't looked at in a long time. Might need to zoom out a little bit here. Okay, so we have a low. From that low, we have a potential 1, 2, 3, 4, 5 pattern, a potential ABC, and a potential next start of the next 5 waves. We retraced 78.6 here from this potential third wave, which is also a common retracement level, although not as common as 38.2 and 61.8. So I would say so those two are the most likely retracement levels for corrective patterns, followed by the 50%. And in some cases, we'll see the 78.6 retracement level. Interestingly enough, very often, if wave 2 retraces 78.6%, we are going to look at a leading diagonal. In this case, however, we assume that this is let's zoom in. Yeah, now it's loading, so I'm gonna have a sip while it's loading. I don't know why the loading always takes so long. It doesn't feel like it's too much data to get the high, low, open, close for a bunch of candles. But yeah, like unfortunately, sometimes that takes a little bit. If I switch back, it probably will not. Yeah, so okay. Yeah, or maybe we move on from Chewy. So, but overall, even with the naked eye, it looks potentially like A, B, C, especially since we already went higher than this point. So we might be in the next 1, 2, 3, 4, 5 short downwards movement for 1, 2, 3. Oh, now it finished loading. Yeah. So yeah, so we have our low point, and from here we somehow have potentially 1, 2, which brings us here, and then in that we have 1, 2, 3, 4, 5 till here, which makes this potentially 1, 2, 3, 4, 5 at the peak. Yeah, a little bit tricky with that 5th wave because it would only be 1 candle. So either we have 5 waves up here and we're retracing the entire thing, in which case we did not turn around in one of the nice levels or the expected levels, or we have 1, 2, 3 up here. Wave 4 retraces 78.6%, and we are now in the 5th wave, in which case we would expect target areas to be around, as we can see here, 33.38 as in quotes a minimum target, and 47 as in quotes like regular target or secondary target area. I have to wait and see, because again, and this also has to play out as 1, 2, or I don't know, like 1, 2, 3, 4, 5. So 1, 2. Yeah. Stop loss should be at 19.05 under that assumption, and the upside, as said, would be here for everything above 33. If we get a little bit more, so over the next couple of days, if there are a little bit more candles on the chart, we might be able to see a clearer pattern up here. But overall, it looks like we finished a corrective pattern that has 3 waves and are now, as a result, in a 5-wave impulsive pattern to the upside. Okay, what we look at next? GameStop we had Green Wave. Yeah, I mean, yeah, I think we're gonna ignore that one until there's actually some positive news or it's closed. Immersion, where are we going there? So yeah, so we bounced the second time at the 100% expansion level for the assumption that this is indeed wave A, wave B, and wave C. Remains what's the word, like excited or not excited? I don't know the English word right now, but we basically have to wait and see. Either we break here to the bottom and something's wrong with my overall assumptions and analytics, or we start our development up from here in another 5-wave impulse. Overall, the pattern doesn't look too bad. That first movement here is a little bit big, but other than that, it looks very much like 1, 2, 3, 4, 5. Even if we use the overlapping moving average, we can see a clear 1, 2, wave 3 being the strongest moving quotes, and then wave 4 developing down here, and then wave 5 being this pile here. And now here we should get our A. B in that case just stays flat, and C. So it really looks like 1, 2, 3, 4, 5, A, B, C. Yeah. So we have multiple indicators that point towards we actually finished 5 waves up and we finished 3 waves down. So there should be the turnaround. So this may or may not be a good entry right now. Do I still hold immersion? I'm not sure. Yes, we hold some. We got in a little bit higher, so we actually bought at the top here. Happens from time to time. There are also options, but obviously we don't have the available cash right now. I could buy what, like 28 additional shares. What's the rate right now? Rate right now is 8, so a little bit more than that. So if we say we buy another 20, 30 should actually be possible or not. 267, yes. So let's buy another 30 shares here. Right now we have 10, so that lowers our average and gives us a bigger exposure. So mid price 891, there we go. So stocked up on that. Oh, we could get a little bit more, so five more. Yeah, so 5 more. Yeah. So there we go. So we increased our position in immersion a little bit. It's not a huge position, as we can see. So we now hold 45 shares for an average of $9.99. So around $400 total that are invested in immersion. I think I said based on the pattern, so based on using the moving averages. I know I hardly ever use them during the live stream, but they're quite useful as well. Sometimes they can show you an Elliott Wave pattern better than what you can see on the chart. But based on that, we potentially could have finished this movement here. Yeah, what else speaks to that? We are at the 61.8 retracement level. We are at the 100% target area. So there are a bunch of things that point or support this kind of labeling and tell us or give us an idea that potentially we might move up from here. And we'll see how that turns out. Now we are looking at the weekly chart, which obviously moves very slow, so there will not be much progress. We are below the 30-cent mark already, I think, since yesterday at least. So, but we're still waiting basically for either a strong upwards movement to prove me wrong, or for a push down to, in quotes, prove me right if the chart is going to load. Well, I really don't understand. Like, I mean, Motive Wave grabs the data from Interactive Broker, and Interactive Broker is running on the same machine. So it's like really baffling me why sometimes it takes so long to fetch the data. Again, it's not like it has to fetch the data for the last 15 years or so. So we're really talking about the visible candles plus maybe a little bit more to the left. So yeah, but yeah. Okay, we're going to circle back to that later. Cost, do we get a chart here? Yes, we get a chart. We actually had the assumption that maybe we finished our correction here. So the idea would be that we have potentially, let's recap that. I mean, there's a bigger pattern. Okay, let's actually, if I zoom out here, we again need, okay, it loads faster. Okay, so we have our weekly chart for cost, and we can see that we potentially have a 1, 2, 3, 4 or 1, 2. Let's actually get rid of everything we have on the chart and make that one from the beginning. So let's first check if that would be the absolute top. We retrace 78.6%, so it's a nice bounce here. So which points towards this might be wave 1 and wave 2. So we need to have, or we would need to have kind of like a 1, 2, 3, 4, 5, with 5 being the longest wave in this case instead of the third wave, or some other kind of pattern. The alternative would be if this would be, I don't know, that would need to be 1, 2, 3, 4, 5. So 1, 2. So then that would only be our third wave, which cannot be because then wave 4 would go too low. So I think on the bigger picture, the assumption that we have 5 wave finished up here is the most likely. Then we have some kind of corrective pattern down here, which might be a drawn out A, B, C, or a combination of corrective patterns, which means that from here we should have another impulsive wave up. Although we have two options with the naked eye, we see a 3-wave pattern here, 1, 2, 3, so A, B, C, which points towards, zoom in a little bit, 3 days, throw an expansion on the chart. So which means it could be that this is an ABC pattern where basically we're now getting another 5 waves down. So the overall corrective pattern hasn't finished. What points or what speaks against that is the fact that we turned around at the 78.6 retracement level of the previous movement. So it's, yeah, I'm not saying more likely. No, actually more likely. So in my opinion, it's more likely that we actually have some kind of 1, 2, 3, 4. And 5 in development, although we see a little bit of a downwards movement here. So the moment we go below 654 here would be the point where that likely, or yeah, that likely isn't the case anymore. I'll have to zoom in a little bit more to get a better picture here. So visually, this really looks like 1, 2, 3, 4, 5, A, B, C. 1, 2, here it's going to be harder, but probably 3, either 3, 4, and 5 with a truncated 5th wave, or 5 finishes here, and then 1, 2, 3, and we are in wave 4, but we already entered the area of wave 2, which would make this now, let's say, diagonal. So, and if this is indeed a corrective wave, we see that we reach the minimum target for that A, B, C pattern here. Becomes a little bit harder, I said, if we go below that low point that we have here. What's lower? This point here is at 652 and this point is at 654. So technically that would need to be the next 1, 2, 3, 4. So the stop loss could be at 654, because if we break that, we still have more downwards movement to come. As long as we stay above the 654, it's possible that this is the next 1, 2, 3, 4 in development, and then wave 5 to finish first wave of the next 5-wave impulse for further upwards movement. Now, our cost exposure is also not that big from what I recall. We hold 100 shares in total, so yeah, that are currently a little bit in the red, but overall the pattern does not look too bad, and there is the reasonable chance that the pattern plays out like this, and that we actually get to see upwards movement in the near future. Now, actually, let's stay here on the, let's try an 8-hour chart. Yeah, let's stay on the 8-hour chart and see how this develops. Maxen, we already got out because we broke through the level here where the pattern became invalid 2, and now we are in a bigger wave 3. In Neo, we have yeah, also not a big position, so 20 shares right now. And I actually also believe that the development will be like this. So 1, 2, and then although we broke through the 78.6 retracement level here and almost retraced 100%, which is kind of like what happens in, or what happened in No. ABC, 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 yeah. There's still a chance, so we would have to break the $5.04 mark to have kind of like a semi-confirmation that we're in the upwards trajectory. Other than that, the stop loss would right now be at the low that we had here at $3.61. And yeah, so let's put that here. So if or when we break the $5.04 mark, then we could be more confident that this will be indeed the next wave 1, wave 2, wave 3, wave 4, wave 5 upwards. There's still also the option that this is a big ABC, but even that would require a bigger upwards movement. So, or that this is again wave 1, wave 2, and wave 3 in development. We can also add, now it gets a little bit crowded on the chart, but we can add another extension here. That one we can move back. So if this is indeed wave 1, wave 2, then we see our wave 3 targets. But on the smaller scale, if we have our first wave here for 1, 2, and now 3 in progress, we can already see the profit target. So here at 505 till 522 for the potential third wave that currently should be in progress. Now, technically, the 161.8 level we are at is also sufficient for a third wave. But again, in most cases, we touch the 261. Or in more than, in many cases, we touch the 261.8 extension level for wave 3. That finishes that. Do we get a chart for Riot today, or will it still just stay loading endlessly? Okay, we don't. SMCI. SMCI, here we are right now looking at the weekly chart. So we covered it also, I think, yesterday or in one of the last streams, that basically right now looking at a potential perfect ABC pattern. We already reached the minimum target, but it's possible that in that last movement, if it's ABC, that we still get another push down. However, I would expect, so if we consider the big ABC, we see that our, in quotes, maximum target would be the $380 mark. So if we break that, we have to consider alternatives. But potentially either there is another small push down. If we zoom in a little bit, maybe we get to see a better picture here. So this is the assumption that we have 1, 2, 3 turns around at the 261.8 level for wave 4. So let's get rid of that one. We don't need it anymore. And then our wave 5 target areas look like this. However, then if we look even closer, we can see wave 1, wave 2, wave 3, wave 4, wave 5. So here 1, 2, 3, 4, and 5. So there should still be another small push downwards. Somewhere here is the wave 2 point. That's potentially wave 3 point. Now, just to clarify, it's possible that wave 4 here isn't finished, but wave 4 might still get another push up. If wave 4 is finished, we get our target area at 355. If wave 4 still has another push up, we can see that our minimum target will align perfectly, or roughly, relatively perfectly, with the wave C, in quotes, maximum target. So yeah, so I said, I think, I mean, it's a kind of like a high risk play because they had some creative accounting that Hindenburg Research shared about them. But I think there is a reasonable chance to assume that in this area here, plus minus 10%, is actually the end of this corrective pattern, and then we go up from here. I probably, if I would play this, I would probably do it as an options play. However, the difficulty would be to pick the right expiration date, because you probably need to at least consider January or so as the expiration date. And I definitely wouldn't bet a huge amount on it, but like a small amount, so high risk, and then depending on the option, potential high reward. And that's that here. Now we can look at SPY, where we have the assumption that we may have finished our correction here, in which case this might turn out to be the next wave 1, 2, and we should get stronger upward movement. We could be wrong and go further down, but overall, I think that we more likely have here 1, 2, 3, 4, and 5 in progress then. 4 might not be finished. 4 could theoretically go down till the low here at 514.14. Then this would need to be a diagonal, but I think from the looks of it, it's possible that we already are in the progress of wave 5. If we use Kennedy channeling technique, however, we would have to draw a line here, and we would only have confirmation once we go above 560, which would be a little bit late. So right now, one could make the gamble that we go up from here, so that this is the next wave 1, 2, and wave 3 in progress, in which case the stop loss could be at 549.29, so less than 1% risk, with the upside being somewhere, as we see here, 571. So that's like, what's that, 6%? No, 4% upside. Yeah. Yeah, definitely not the best trade, but definitely also not the worst. So let's stay here on the 8-hour chart, I guess. Yeah, and zoom out a little bit again. So keep an eye on it and see how that goes. I guess NASDAQ will be similar. Let's check. Yeah. Similar situation. We have the assumption in this case with the naked eye that here's our correction start. Obviously, that's wave A, that's wave B, and wave C retraces exactly 100% on the dot, plus minus. How close do we get here? 2 points. Yeah, plus minus 2 points. So this would be a definite long entry for me here. So where we potentially look at the next 1, 2, 3. And again, our target areas here are marked on the chart. So there is like a decent amount of upside. Could be wrong, could go further down. But I think overall, this pattern here, either it's 1, 2, and the next 1, 2, and then from here we'll get a strong break downwards. But I think the more likely scenario is 1, 2, 3, 4, and now we get our wave 5. So with some stronger upwards movement to get 1, 2, 3, 4, 5. We could again throw an extension here on this potential 1, 2 to get target areas for a potential wave 3. But I think, yeah, I mean, you can do that on your own if you want to. Yeah. And with that, we covered that. Now, Novavax bounced again at the deceleration trend line. Now, there are two options. We'll have to zoom in a little bit here. I mean, option number 1 is we have wave 1, wave 2, and we are currently in wave 3 upwards, where we have the next 1, 2, and we'll get our next strong push. Option number 2, so now it's finally zoomed in, yeah. Option number 2 is that this is wave 1, and this is only wave A, wave B, and we're still getting a wave C down. But even here on the 8-hour chart, it looks like we don't have 3 waves in this movement, but we have 1, 2, 3, 4, 5 waves, which makes it more likely that the correction is actually finished here at the 50% retracement, and that this is indeed, we'll need to zoom in even further, that this is indeed, come down here, indeed our next wave 1, wave that retraces exactly 78.6%, and wave 2, and that we're now in our potential wave 3, for which our upside would be, or our potential wave 3 targets would be, as we can see, in the $19 area. Now, if we zoom out again a little bit, so the assumption would be that this is wave 1, this is wave 2, and then within that bigger third wave, we have wave 1, wave 2, and are now starting our third wave that should take us around the $20 mark potentially. If that's the case, then the bigger third wave should take us to the, as we can see here, $30 mark, which would then mark actually our minimum 5-wave target. And if that indeed happens, so if I'm not completely wrong, and we are here in a third wave and it reaches the usual 261.8, then this third wave here would likely reach this 261.8, and then we would still have a wave 4 and a wave 5, and we might actually get to see our 100% target in the $60 area. So Novavax, still in my opinion, based on Elliott Wave Theory, one of the most promising patterns that we have on the chart. We have 5 waves up. We have yeah, we have here 5 waves, which actually on a bigger pattern is 1, 2, 3, 4. All the retracements happen within reason and like around the usual guidelines. The ABC pattern here is visible with the naked eye. Yeah, here for this movement, that's our third wave. We can also with the naked eye see on the moving averages 1, 2, 3, 4, and 5. For this pattern, we can see with the naked eye A, B, and C. So this should potentially be the next 1, 2, and now again the next 1, 2. So yeah, even here we see 1, 2, 3, 4, 5. Although it's lagging a little bit, obviously, with the average here. It's harder to see the ABC part here because of the distortion that happens with the huge price difference that we see here. But yeah, overall, I think Novavax is one of the plays with huge potential. The safe stop loss, in my opinion, would be, I mean, the really safe stop loss would be down here at 374. So because wave 4 could theoretically develop further down, but I personally would be okay with using the 866, or again, doing it as an options play. So buying call options to basically only risk the premium. However, as far as the time goes, we have to think towards the next couple of months, because if we're now in a third wave, it will still take time to play out to actually develop the pattern that I'm seeing here. Now let's circle back. We had Chewy, maybe it's loading now. Yes, it is. And we have the low point here. Again, we have the assumption that this is, let's actually throw an extension here, that this is 1, 2, 3, 4, 5 of some kind for a first wave up. And then that likely is actually really only wave 3, because we bounce at the 561.8 extension level. We don't bounce at 261. The bounce here is not really sufficient. I think, yeah, like there we actually are looking at 1, 2, 3, 4, and an extended fifth wave, in my opinion. But yeah, so we have 1, 2, 3, wave 4 retraces 78.6, which is fine. And now our 5 wave target, as said, would be, that one we don't need anymore. Our 5 wave target would be, as said, at least a 33, but probably higher. We can use Kennedy channeling technique. If our labeling is correct, we can connect 0.2, 0.4 with a parallel through 0.3, extend this, and the fifth wave has to touch the median, which already happened here, or the top. Now, if we combine that with our usual target, we actually see that we should touch it here roughly again. So that's why we have an overlap in September. Or if we consider the 100% target, we actually have the overlap already earlier. That's not going to happen. We're not going to shoot from here to here, most likely. So we might not reach the top here, but we may or may not, if depending on how fast we develop, we can see that maybe it takes longer, and in December we reach the 100% target. Maybe wave 5 falls short and only makes the minimum retracement or extension, minimum movement here. But again, we'll also need to be able to label 5 waves in here. We can actually, from here, April 25, let's show the auto labeling on the chart. Wrong button. No, come on, auto wave. Uh, 24, 4, 20 update. Yeah. So, well, I personally think that this here is wave 1, 2, 3, 4, and we're in fifth wave. Auto labeling actually believes that this is wave 1, wave 2, and we're now in wave 3, which would provide even higher profit targets. So, yeah, well, I don't fully agree with the auto labeling. It also points in a bullish direction, so we'll have to wait and see. I might actually label this so we don't, or I don't forget next time we look at it, what I think is going on here. Yeah. So I think that we're moving like this. Now, question will be that fifth wave move. If I'm right, it could still be wrong. We could still go down. We already went higher than here, so it's less likely that I'm wrong, but it's still not completely out of the question. And we don't hold a position in Chewy right now, so it's not really that it matters much for my personal portfolio, but still nice to look at. And now let's see if we actually get Riot to load as well. If not, we're just gonna call it a day here. So don't forget, by the way, last time we asked the Magic 8 Ball at the beginning of this week about GameStop. It said it will go to the $30 mark, if I recall it correctly. So for the end of the stream, we're actually going to repeat that question. I think it was about next Friday. So yeah, so will GameStop finish next Friday at $30 or higher? As I see it, yes. Okay, so still the same answer. It's actually interesting since there's I don't know how many yes and no answers are in that 8 ball, if they are equally divided. But I think, yeah, like the consistency of getting the same positive outcome reported and not getting conflicted statements is actually quite funny. Anyway, I think we're going to end it with that. Friday futures is now retraced a little bit more. So did we go to the, yeah, there's also not probably loading. Okay. Did we, it says 525, but I don't recall the exact price levels anymore. So actually, one of the things that I would like to have is kind of like an easy way. I know on TradingView you can share your predictions and quotes, so you can label and say, I think it will go there, I think it will go here, but it takes quite some time because you have to actually label the chart on TradingView, and it's kind of like annoying to do it here and then do it on TradingView again and so on. But I'd like to have some easy way to keep track of my forecasts to see effectively, like really as a fact, how often I'm right, how often I'm wrong, and how often I'm technically right, but just my profit targets, for example, are not correct. Yeah. Okay, that's what we looked at, 8-hour chart. Okay, and there we, yeah, potentially 1, 2, 3, 4, 5 finished retracement down to the 38.2 level that we touched here. We can see went to $5.05 and so plus minus 2 cents. So there is a chance that that correction here is over and it will go up from here. I think, yeah, I think long term there are just too many indicators that point towards further upwards movement. I might be wrong, but we'll see how it plays out. Anyway, that's it for today. Thank you all for tuning in. Olga, thanks for saying hi. I wish you all a lot of success for the rest or for the remaining week. It's not that long anymore, and we'll likely see each other then tomorrow around 5 minutes before market open again. Don't forget, as always, like, subscribe, enable notification, and again, the reminder, everything that you saw in this live stream is also linked in the description down below. Olga, have a great rest of the day and the rest of you as well.